Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Having fallen somewhat hard during the trading session on Thursday, along with piercing beneath the 68.70 support, the Australian dollar is currently rebuilding renewed momentum. Meanwhile, the US dollar index, which measures the greenback strength against a basket of six major currencies, is slowly easing away from the 20-year highs of 104.93 and is currently trading around 104.60. Based on the technical aspect, we can see that the Australian dollar is attempting to regain as the bullish divergence once again seems to be capturing the market. And that is seeing a rise as we speak, could see a move to 69.15, and a breach of that level will give us further rise to 69.60. Now, with that being said, though, conversely, the market may actually find this level of 69.15 a little bit tough and actually could reject from that region. And if so, overall keeps the target down towards the lower region of around 66.50.90. Looking at the euro, the market crushed the level of 104.85.95, and from that crumbled all the way towards 103.40.60, which was the next objective now reached. As I mentioned, the dollar index did reach a brief high of 104.93 and eased back from the 20-year highs. With the downside objective reached at 103.40.60, I feel the market may be seeing a little bit of potential of rebounding. And behind that view is the fact that there could be a bit of profit taking, as we have been negative since 111. So let's see how the market plays into the Friday session, or more to the fact, the European session. And if it's so, we could see a small retracing up to 104.40 or even around the highs of 104.95. The call to $yen was towards 127, figure 45, and it nearly claimed that target overnight, but the market did stage somewhat a rebound as a little bit feared of being short. As we've seen on many sell-offs for $yen, the market has snapped up demand quickly, and right in front of that level of 127, figure 45. I do feel, though, that the technicals are still somewhat heavy, and therefore the market should reject the level around 129, figure 55 area, and look back towards that 127 region and reassess. The lackluster price action for sterling still looks for the fact that we could see a bounce from 121.70, and if so, with the divergence clearly seen from the MACD, may see a rise back towards the region of 122.45 to 123 to 123.90. I'm not bearish down at these levels, even though there is somewhat mixed or conflicting technical signals. I do feel, though, that the bullish divergence may overcome or overthrow the bearish threat and see the market rise. Sterling Kiwi still managing to hold above 195. However, I feel the market will likely break down and furthermore see a target of 193.80.90 in the scheme of things and reassess from there. The downtrend for gold, well, the market reached its objective, and that is of 1,820 to 26 overnight, and now holding to a somewhat bullish hammer. We've got to wait for the New York close to support this candlestick, but nevertheless, the market is finding a bit of momentum, and keeping an eye on the RSI. There's a bit of divergence here. In light of the downside being reached, though, at 1,820, I'm actually holding a neutral view at these levels in case we get a retracement back to 1,849.53 and reassess. Finish up with oil. Well, the market is a little bit apprehensive in taking the challenge towards that 106.50 level. And from the retreat, we can now see that a little bit of a bear factor is coming into play here, and maybe even looking back towards 102.30 to 55 as a potential target. In light of the downside being reached at 97, we may see a little bit more whipsaw price action into the coming session of the London and New York. Well, that wraps it for the week. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.